All right, welcome back into a Market Day Report. It's the last we're going to get together until the end of this day. But you know what? You get to stick around and let the clock do the work for you. 1 o'clock Central, top of the hour, 2 o'clock Eastern. It's Cow Guy Close. Episode number 786. We're almost up to 800 live shows. And Friday was our 3-year anniversary, now in season 4. So how about that, right? We're still having fun. We love it. We're going to try to make it bigger and better for you again this year. But that's the Cow Guy Close, 1 Central, 2 Eastern. Now, if you can't hit that show or make that show, we put it back on the radio. And because there's been some demand, we put it back on 3 times. So these are Eastern times. We put it back on at 6 Eastern in the afternoon, early evening, 10 Eastern at night, and then 3 Eastern, 3 a.m. Eastern in the morning, right? So that would be in Central Time. That's 9, 5, and 2 a.m. How about that? So 5, 9, and 2 a.m. We want to see you there, or you can listen to it. But that's 3 ways to listen to it. One way to watch it, and the watch is probably more fun. But we really enjoy what we're doing, and we really enjoy the fact that you guys like the show. So 1 Central, 2 Eastern, the Cow Guy Close. Top of this hour, we're ready. Got a good show lined up. All right, let's talk about what these markets are doing for us. Let's begin with corn. It's still kind of heavy here, 2.5 cents lower in March. We're a half cent off the low of the day at 4.74. Maize down 2.5 cents to 4.84 and a quarter. And again, that's only 3 ticks off the low of the day there. We're well off the highs by almost 6 cents. So corn on its heels right now as we speak, going into the close. Let's take a look at soybeans. March beans down 6 1/4. 10.46 3/4 is last. We're a penny off the low of the day and well off the highs by about 17.5 cents. Maize down 6.5 cents to 10.60. That's 3 ticks off the low there too. So soybeans have is what corn has, and that's we're kind of getting a little bit tired. Everything's trading a little bit easier on our heels. Chicago wheat's down up a penny. Look at that. 5.46 is last. That's just enough to be 3.5 cents, 3 1/4 cents now off the low of the day, but 6 cents, 6 1/4 cents off the high. We're a 1/4 cent better in July. 5.67 3/4 is last. And if you go all the way out to D's, that's down a half cent to 6.01. Trying to hang on to that 6 handle. That's Chicago wheat. Let's go to the hard red, Kansas City, see what's going on there. Well, we're up about a half to 3/4 across the board, but March is up a half cent to 5.61 1/2. Kind of in the middle of that range. Not a lot going on. We've had about an 11 cent range. Maize is up a half cent to 5.71. July, that's up 3/4 cent to 5.80 1/4. So that's hard red. Kansas City, let's go to the spring wheat in Minneapolis. That's down 3 1/4 cents in that March contract to 5.90 1/4, just a tick off the low of the day. We've had an 8 1/4 cent range. Maize down a penny 3/4 to 5.99 1/2. All right, so that's spring wheat Minneapolis, anywhere between say 3/4 cent lower to 3 1/4 cents lower across the board there. Let's take a look at cotton, and we'll get to our guest analyst. 13 points lower there, 67.51 is last. That would be the March. Maize down 22 points to 68.65. All right, it's time for Ted Seifried, the Ted Seifried Show. He's with Zaner MarketCast in Chicago. Ted, thanks for coming on. All right, what are your thoughts here with all those numbers?
Well, first of all, congratulations on your 3-year anniversary, Scott. That's awesome. It's a great show. As far as what we're doing today, I mean, we had gotten really overbought. We had reached 70% on the relative strength index after Friday's strong gains and then follow through on Monday. We haven't gotten over in the relative strength index really in either market in like 6 months. So, naturally, we're having some back and fill kind of simmering down a little bit. Now, the question is, when we look at that report from last Friday, which was really rather bullish versus expectations, but if you look at what the cash market had done, if you look at what spreads had done, I think a lot of that might have been our market. And obviously, when there's a big miss like that on the analysts, the algorithms and the computerized trading and the funds, really they take over for a little bit, and it's a chart breakout. But do we have the fundamental reasoning and rationale to continue to go higher? And for corn, you could say maybe. We still have risk in the form of that second season safrinha corn crop in Brazil.
Right.
We still have risk in China. And we have risk as far as our planting is concerned. So I think there's probably not a whole lot of downside potential from corn, aside from, a bit of a pullback like we're seeing now. But I don't know if we need to go that much yet either. So we might have reached our upside objective for now. And then for soybeans, well, you don't have that risk of that second season, right? I mean, the Brazilian first season crop is really aside from the southern area. And then as far as planting delays, well, that would benefit soybeans. So I don't know. I worry that, we had this knee-jerk reaction, but I'm worried about the longevity of it. I think this is a really good place to be looking at some sales if you missed out on that over the past few months. I mean, we're trading some of the highest levels we've seen in quite some time. I think it's important to do that.
I agree 100%. It's 20 to 30%. Some folks are talking about maybe to get sold here. And you know what? The guys that did it at these levels and maybe a little bit higher last year are the ones that came out ahead too. All right. Thanks for that. Stay right there, though. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried. He's with Zaner MarketCast in Chicago. We'll be right back after this. All right, let's take a look at your livestock prices. We'll start with live cattle. I pulled that board up, and there we go. It just went away on me. Live cattle are going to be mixed here, right? We've got a Feb board up 10 cents, 197.50. April up just a nickel to 198.25. And we tail off almost to 90 cents lower in October. 190.65 is last there. That's live cattle. Feeder cattle, they also just a tad better here. 25 cents better in the March to 268.15. 27 cents better in April to 268.60. Keep climbing that wall of worry, that's for sure. How about lean hogs? Well, we're higher as well there. We got a Feb board up 37 cents to 83.55. In April, that's up $1.17 to 90.47. Let's bring in our guest analyst, Ted Seifried, to take it away with us. Ted, I want to put a cap on it for us. What do you got?
Yeah, you look at the cattle complex, right, and it feels like we're kind of a deer in headlights right now. I say that because, we've had this higher rate of cash trade, which has been very beneficial. I mean, obviously, that's really what's been pushing the market higher. But now we're looking over at the stock market saying, wow, this is a concerning chart. We are kind of standing off on the edge of a cliff looking at what could be a deeper correction, or maybe the biggest correction that we've seen really since COVID, or the beginning of COVID. Not saying that's necessarily going to happen, Scott, but I think cattle are just sort of pausing to wait to see the equities market, just to kind of give us an idea of what domestic demand might be. In the meantime, the hogs are gaining some strength and continuing to sort of bounce off of that corrective low. I think that looks good, but I do think that there is some interest coming into the hogs market again, based on economy worries.
I agree.
Maybe we need to spend less and buy cheaper pork than the higher priced beef. So I don't know. That's my thought.